Hello, everyone, and thank you for tuning in this afternoon. We hope that you are all having a great start to your month. My name is Ken Tapp. I am the chairman and the CEO of Social Life Network, and with me today I have Todd Markey. He is one of our directors, as well as the president of one of our company licensees, MJ Link. And for those of you who are new to our company as a shareholder, we are a social and e-commerce tech incubator with a focus on helping niche industries that are either new and emerging growth industries, such as the cannabis industry, to the very mature industries, for instance, the hunting and fishing industry. Now, we target industries that struggle with adopting the combined power of social networking and e-commerce to solve the competition problems that small business professionals face every day in both growing and scaling their companies online. And that's why it makes sense that we are in, for instance, the hunting and fishing industry and cannabis and so many others. Now, not only do we provide our licensees with the use of our own AI and blockchain-powered technology platform, but we also take an active role in supporting their growth with the guidance and the experience of our more than 200 tech industry advisors that we have on our own management team.
Yeah, ultimately, this ensures our licensees have the opportunity to get to market faster, navigate the pitfalls and speed bumps that are in those industries, and it increases the probability of each company reaching a liquidity event, such as an IPO or an acquisition. Through this model, Social Life Network and its shareholders benefit from a 15% stock position in each of the licensing if they reach a liquidity event. And along the way, Social Life Network charges a 5% fee on all revenue generated by the licensees. To learn more about this business model, please reference our company presentation deck on our website at www.socialnetwork.ai.
Yeah, we usually start out the podcast, Todd, going through our updates for what's just recently happened with the company or companies, and then we typically finish up with our questions and answer session. However, as you and I both know, we've had a higher number of questions that we've received over the last week or so and decided to put the questions and the answers at the beginning of the podcast. Now, many of the questions have been, of course, covered in part or sometimes in full during the last few months in previous shareholder podcasts, as well as our 10Q or 10K from last year and, assortment of 8K filings that we do throughout each month. But we are sensitive to everyone's busy schedule, and everyone's got a limited amount of time that they can read through and listen to our podcast. So what we've decided to do, therefore, is we will be sticking with a new format moving forward so that we're answering these questions right off the bat in the podcast, and then we'll move on to providing updates and greater insights into the companies that we incubate at Social Life Network at the end of each podcast.
Yeah, Ken, like you said, today we're going to do things a little bit differently, for everyone who's been following our podcast series. And we'll cover all those questions that have come in over the past few weeks. And we're excited to do so. Obviously, we've got a real enthusiasm and an energy out there of our supporters. And there are a bunch of them and a bunch of questions that we want to get to. And that's why we're going to add an additional podcast in this month. A part 2 of the podcast that will air next Monday. Our goal by doing these back-to-back podcasts is to make sure we can squeeze in as much information for everyone that's listening before we have to go into a quiet period for 30 days prior to our 10K filing at the end of March. With that being said, don't worry. During the month of March, we will be substituting the Social Life Network shareholder updates with a weekly podcast series brought to you by our individual licensees so that you can learn about more of them individually and industries that they operate in. I will also add that next Monday at 4:20 p.m. Pacific time, we will begin our MJ Link shareholder update podcast that will air every other Monday. You can access that podcast next week by going to mjlink.com/invest. All right, well, with all that being said, let's jump right into it. And Ken, I think that we should start with an important question that's fresh on everyone's mind and talk a little bit about the 8K that we issued last week stating that we are debt-free, and talk a little bit about that 8K and whether or not we plan on taking on any additional debt going forward, and also questions that have come in regarding the reverse stock split 8K that we previously had commented on.
Yeah, actually, a good place to start, right on the heels of that 8K from the other day. I know that many of our shareholders that have been following along for months now were anxious for us to reach that point, and we could not be more excited. Internally, I'm sure externally, all of you are equally as excited that we have all of the debt off the books, and we are moving forward into 2021 without any of that hanging over our head. This allows us to really stay focused on the growth and of each of the licensees, but even more so the top three that are in the process of going public. Of course, we've got the MJ Link, which is well on its way. We've got Hunt Post and Like RE, which are in the process of getting their Form 1A filings done and sent off to the SEC. I suspect that will happen here in the next few months, but, great part about giving updates every couple of weeks is to make certain that everybody is kept up to speed on the progress on all of these things. As it relates to any more debt, so long as I am the CEO and the chairman, this will not be the case moving forward. We will no longer have any sort of debt that the company takes on. And I will add that moving forward, knowing that people do have a limited amount of time, sometimes 20 or 30 minutes to listen to a podcast isn't a luxury. So we are going to start to have each of the podcasts, the past and the future podcasts, transcribed so that you can just read through those, speed read through them if you'd like to, and get the bits and the pieces that are most important to you. So look for those later this week, and then, of course, each week moving forward, we'll have that information transcribed and available for you right off of our website as well. As it relates, Todd, to the question with the reverse stock split, we have no intention, as we put in an 8K, a couple of months ago now, that we would be moving forward with the reverse stock split that we had filed through an information statement last year in the month of April. And in that information statement, it gave us until the end of March to execute on a reverse stock split. Now, we put that in place for strategic growth reasons. Unlike many companies that execute on a reverse stock split to oftentimes, keep their boat from sinking, that was not why we had that in place. And we did not feel like we needed to move forward on that come the first part of December. So we sent out an 8K letting all of the shareholders know that the board had gone ahead and made the decision that we would not be executing on the reverse stock split in that window, which ended at the end of March 2021, in about a month or so from now. That being said, the concept of doing a reverse stock split, just for the education of all of our shareholders, which of course we know you're invested in other OTC companies, et cetera, is that a fully reporting to 12G company must do an information statement first. They have to file that with the SEC, and then they have to mail out that information statement saying that they're going to change their stock structure, whether it be a reverse stock split, an increase or a decrease in authorized shares, any type of new share classification, Class B, preferred shares, et cetera. All of that must be done through an information statement. That information statement, after being filed, must then be mailed out to all registered shareholders so that the company can then receive feedback from everyone. Now, there's a 30-day window for that to happen. They must get feedback to the company in that 30-day window. And then, based on whatever that feedback might be, it too needs to be filed with the SEC. And then you need to have the SEC examiner go through and approve that information statement. So this is definitely, as you probably arrived at from my description there, not something that just arbitrarily happens overnight. You wake up and you check E-Trade account or whatever it might be, and you see that the company has changed their share structure or they have done a reverse stock split or that sort of thing. So rest assured that that is not what happens with our type of fully reporting company.
I know that there was a lot of technicality involved in that answer. And to be honest, I know that is something that our audience has really requested and desired. They want to know the mechanics of how these things work. And I think that's something that we have shared and will continue to share with our audience and find ways to make it more palatable and understandable for someone who may not have that level of sophistication when it comes to understanding how public companies report. So just to summarize part of what you said, it sounds like, number one, the company is debt-free. Number two, the company is not looking to take on any additional debt. And number three, the company does not have any intention of doing a reverse stock split.
Yeah, exactly.
Okay. Well, Ken, one thing, I know that you briefly touched on this in your response as it related to the 3 IPOs that we have potentially scheduled in the near term. Can you talk about these 3 IPOs? Will they be this year, and will they be going to the NASDAQ or the New York Stock Exchange or another place?
Absolutely. And there needs to be some clarification here as well. First of all, the type of IPO that we are doing are through Regulation A Tier 2 offerings, something that people will sometimes confuse with the way, for instance, Airbnb goes public or other tech companies go public from scratch right onto NASDAQ or New York Stock Exchange. And here's how it works, Todd. As soon as you file what's called a Form 1A, which is different than an S1 registration, which is what Airbnb and other companies like that file. As soon as you file that 1A with the SEC, you go through a commenting period back and forth. Hopefully it doesn't take too long, 2, 3, 4 months. And then when the SEC qualifies that 1A, you now have the ability to move forward with your Reg A Tier 2 pre-IPO offering. And they give you a 12-month window that can be extended an additional 3 months. So let's call that a 12 to 15-month window to go out and raise this capital to go public. And in that process, you can also change the price of the stock if you write that into the 1A the correct way and get it approved. And therefore, similar to doing your pre-IPO roadshow, if you're Airbnb or some other company, you can get feedback from shareholders, from industry partners, from brokers to decide based on that sort of demand versus supply on your stock, what the stock price should be. And so I wanted to just put that groundwork down before I got into the actual answer here, which is we have currently MJ Link, which had qualified for its Reg A back at the end of September of 2020. And that means that 12 to 15-month window began at that time. So let's just say if we were to use the full 15 months for MJ Link to raise this capital, Todd, that would bring us to the end of December of this year. Now, we timed this out kind of the way we were hoping it would unfold because we did take into consideration at that time, at the end of September, that we had an election coming up, that potentially there would be sort of a switch and kind of control power both in Congress as well as the White House. This was obviously a potential at the very end of September. And that if it turned out the way that it did, it was entirely possible that there would be marijuana policy and law reform that took place sometime in maybe the first half of 2021. And this was all, of course, based on input that we were getting from all of our connections in the industry and different associations and Capitol Hill. And so we timed it so that through 2021, we could move forward with the IPO with MJ Link, with the intention of doing that on NASDAQ or the New York Stock Exchange. And now that we have, a month and a half under our belt for 2021, and we're getting some feedback from Washington, we feel like there's a pretty good chance that policy reform will take place sooner versus later, and that we will then be able to decide to go and take the company public maybe earlier. So that's, again, why we're doing these updates every couple of weeks, to keep everybody up to speed. And we'll continue to do that so that you know exactly when that will take place. As it relates to the other two, like our Re and Hunt posts, we still have to file those 1As, and then as soon as we get through the approval process, then that 12 to 15-month period begins.
Gotcha. Okay. Tell us a little bit about what this means for these IPOs, mean for the public entity in the long term, and what does it also mean for it in the short term as it relates to a potential uplisting to the OTCQB?
So just to give a little bit of the backstory for those people who haven't had a chance to do the research themselves, we were listed on the OTCQB from the middle of the summer 2018 through this time last year, 2020. And then we dropped below that 1 cent per share, which of course is a qualifier to stay on the OTCQB. And of course, when you fall off of that, you go down to the OTC Pink, and you have the ability to uplist back into the QB so long as you fulfill their minimum requirements. In our case, those are really minimum requirements. There's only a couple of little things that we would need to do, one of which, however, is out of our control, and that is to make certain that the stock remains above 1 cent per share for 30 straight consecutive trading days in a row. And then after that, it's just a matter of some application forms and a couple small filing fees, and then you're off to the races and you're back onto the OTCQB. We have had this in the back of our mind since we came off of the OTCQB this time last year. We knew that at one point we'd be above the 1 cent mark again and continue to grow. And so now that it's back on our radar, just as of the last few weeks, we're focused on it. And again, we'll keep people up to speed on that process, but we still would need to get through that first 30 days of having the stock above a penny to make certain that that qualification is met with the OTC. As all of that relates, however, to the rest of the growth in the company, well, then, of course, you can just kind of do the math and understand that, look, each of these three companies, not to mention that we have the other 4 companies and some others that will be coming online this year that continue to add value to the growth of Social Life Network. And in a perfect world, if a perfect accounting world, that should relate to a higher stock price that maintains the value over a penny. But again, that's outside of our control. That's up to shareholders to decide. All we can do is make certain that we continue to grow as a company and continue to pass this information along so that everybody understands where we are in that process.
Okay, yeah, Ken, since we're on that subject, talking about share price, I want to reference a question that had come in from a previous podcast from back in December where we had mentioned a potential buyback in the future based on our company's valuation. What can you share or add some color about that? And also providing some information about intentions to go to the NASDAQ and opportunities or potential for mergers or acquisitions along the way.
Yeah, I'm going to start with the NASDAQ question first, because since we went public back in 2016, the goal was always to get to NASDAQ. We just talked about uplisting to the QB, and we did that once before, and now the idea would be to get to NASDAQ, whether that be uplisting back to the QB and then to NASDAQ, which seems more likely. It's probably the easier path as it relates to all of the paperwork and the different stages in the process. And it's a lot more complicated than I'm describing it as. So it makes more sense for us to move to the QB and then start focusing on getting to NASDAQ. All of that, obviously, based on our business plan, has so much to do with the liquidity events of the other companies. And in that process, would we be looking to acquire or merge with other companies that our business model matches up with, that might also be an incubator, or might be a tech company that we need to add to our own IP, so that our companies that we're incubating have a better opportunity for growth. There are a lot of things that we think about at the management level. So yes, on always looking for merger acquisitions that make sense for us as an incubator. Yes, for getting to NASDAQ. And as it relates to a share buyback, then that share buyback has so much to do with what the public market price of the shares are and what we've priced those at or valued those at internally. If they are at a discount on the public market, just as I mentioned back in December, then it makes all the sense in the world to do a share buyback.
Great. As we keep people posted and these subsidiaries that we have continue to mature and move forward with the strategies that we have set forth, can you talk to us at all about what some of the potential marketing strategies may be for these individual licensees, HuntPost, MJ Link, and LikeRE, what we may be doing differently, unique, or what the plan is there?
Yeah, and just for some clarification, because I know that this can be confusing for some folks, these are not subsidiaries of ours. These are companies that we incubate. They are licensees of ours, and so that does limit some of our management control, not just how they price things and what they sell, but how they market and advertise those things, and as that relates to user acquisition too. So we have, from our experience as a management team, and again, we've got 200, just a little over 200 advisors, as well as our executives and whatnot in the company that can give advice to these licensees. And the advice that we always give right off the bat when they first start is to go out and create partnerships with associations in each of these industries, because then they get free users. And not only do they get free users, but they get the influencers in those industries if those partnerships are structured properly. And here's an example, whether you're talking about hunting and fishing, partnering up with the NRA, or the bass fishing associations that are out there, whatever it might be, you can get some of those influencers, those big brand names in those industries that got a big following online, and all they have to do is go out to their own followers and say, hey, you need to come in and join this network. Well, that becomes basically free. Or you're talking about the real estate industry, and you're partnering up with the National Association of Realtors or National Builder Association, and you can get a KB Home or a Toll Brother or Keller Williams office or whatever, and your top sales divisions or people to come on the network and take ownership in it, and then go out and tell their followers online and clients that they need to be on the network. Well, those are free users. And so as you can start to build that main level, that first level, or that foundation of the user base, then it makes it a lot cheaper and a lot faster to expedite the growth of user acquisition as you start to move forward with those companies. And therefore, you have to spend less in online advertisement like TikTok had to, right? They came in and they immediately had to start competing with these behemoths of companies, Facebook, Instagram, and so on and so forth, because their technology was no different. They were just going after the same user base for a slightly different reason. So it's not apples to apples. And So when we have, Todd, different companies at different growth stages, finally going out and starting to advertise online, it's more like a sniper rifle than a shotgun blast to the potential users that come online. And that's great for us because it means that the company that we then have a shareholder position in is more valuable. And it's not, most importantly, turning itself into so many of these other tech companies that end up really going public under with their head under the water. You know, they're spending years to reach a point where they're revenue positive because they're paying off all of this debt that they're incurring along the way that they have to spend on user acquisition. So I hope that the listeners, the shareholders that understand that that's the best way for each of these licensees to go out and acquire users, understand that the long-term value to them as a shareholder is that the value of those shares in our company. And if they go out and invest in, say, MJ Link or Hunt Post or Like or Re along the way in those pre-IPOs, that those shares are more valuable than they would be on the books compared to somebody like an Airbnb or Uber or that kind of thing.
Yeah, Ken, really appreciate you getting to and answering some of these questions. And a big special thank you for everyone who tunes in to ask some of these questions. I think that today's podcast turned into a real crash course for new shareholders, as well as a great recap for existing shareholders. On that note, we will continue this podcast in a part 2 that will air next Monday, February 22nd at 1:30 Pacific time and 4:30 p.m. Eastern time. Thanks, everyone, for tuning in, and we hope everyone has a wonderful week.
Thanks, everyone.